Hello, and welcome to this State Street Digital podcast. As ever, I'm James Redgrave, Head of Thought Leadership and Editorial for State Street Digital, and today I'm joined by Sven Werner, Head of Custody for State Street Digital, and Justin McCormack, Head of Legal for State Street Digital. Sven, Justin, thanks for joining me.
Thanks for having us.
Now, you both contributed articles to the recent Digital Digest discussing challenges to both regulators and also to industry participants regarding how to define and govern the ownership of crypto and tokenized assets. And I'd like to go into a little more detail on that topic today. Justin, you make the point in your article that the definition of tokens and their treatment as property, as distinct from the assets they represent, differs by jurisdiction. And this generally isn't the case with more established financial assets. So what does this mean for creating a global market for tradable, storable, tokenized assets?
Yeah, it's a great question. And I think the concept of identifying what the property right is that we're transferring is critical to developing a broad and global viable tokenized asset market. I think we are seeing regulators come to the conclusion to help address what the property right is. Historically, there's been a lot of focus on how do you regulate the intermediaries in the market, but we're now seeing more clarity on what the actual asset is. So for example, in the US, we've got the Uniform Commercial Code, and there's been a new section of the Uniform Commercial Code that has been created. It now needs to be adopted by the states, but it brings clarity to digital assets and how we transfer digital assets and how that's respected from a property law and a commercial law perspective. We're seeing as well in a number of jurisdictions, for example, in France, Luxembourg, Germany, laws are being passed to specifically allow the creation of tokenized assets, to respect them under the law, to respect them as referencing the underlying asset, and to address how you transfer them. So there's work being done to bring that clarity. There are some areas that still need work. For example, in those jurisdictions that I mentioned in Europe, it's still not possible to trade those assets on a listed exchange or to list them on an exchange because there's a requirement that they be registered with a central securities depository if they're going to be a listed security, and that's not possible currently for a digital asset. So there are aspects that need to be addressed. There's progress being made, I think, is the first part, but there are different steps that need to be taken, and I think we're starting to see jurisdictions take those steps. But we'll need to make sure that continues apace in order to meet the demand of tokenization.
Yeah, absolutely. And especially after listening to Justin said, it's obviously quite a complex legal situation that investors are faced with. On the one hand side, you have these variances across jurisdictions around the treatment of assets, but also we have quite a variety in institutions helping investors to, let's call it, safekeep, for argument's sake, investments in digital assets. And in this instance, let's talk specifically about crypto. And the issue in some sense is that obviously the applicable legal framework under which various types of providers operate can differ. You may have banks, you may have corporates. With that comes a broader oversight framework, also a different, if you want, approach to how you manage risk and the effective controls relevant to it. And become, from my perspective, really clear is the good evergreens of custody in terms of segregation and the controls in order to ensure the bankruptcy remoteness of declined assets is both a function, obviously, of the law, but also very much a discipline and control process adopted by the provider. And in question here, we have really seen that due to a lack of consistent regulation enforcement of these standards, in some cases, the impact to investors was quite severe. And I think going forward, it would be an expectation from my side, is a need for regulators really to create a level playing field, making sure if somebody has to segregate, here is what it means, and here are the controls that are needed.
Thanks. I think that's a really important point. It's certainly one of the big themes of our publication this quarter is that the relationship between the regulator on one side and the market on the other and how they interact with one another is crucial to shaping these rules and regulations. So, Justin and Sven, if I could just get your sort of sense of how far down the line we are in terms of, effective and meaningful collaboration between those two different sides.
I do think that this is another one where it's dependent in many cases on the jurisdiction. Some jurisdictions are much more open to digital assets, to crypto assets, and trying to incorporate them into the financial markets than others. And I just kind of would note back too on the part about Celsius, the majority of the assets were subject to that court decision, which said that they were the assets of Celsius, not the clients. But I think there was a small portion, because that was the Celsius Earn product. There was a small Celsius custody product that they had that was the US only, which did not participate in the Earn program. And there was a court order in the US that those assets, which was a very small portion of the overall Celsius assets, were able to go back to customers immediately, that they were not the property of Celsius. So it does speak to the regulatory position, where I think a lot of people who were using Celsius thought they had their assets in custody with Celsius when they really didn't. There was only this really small portion of clients that did. And so it goes to the point that you need to have the regulatory oversight to ensure that firms are accurately representing kind of what they are doing, and that the approach when somebody is referring to, well, we're custodying assets or we're holding assets in this way, that there's clear disclosure to clients about what that means. Just kind of going back to where are we with the regulators and the business world working with tokenization. I mean, I think in a number of jurisdictions, for example, I would say in Luxembourg and France and Germany, I think also in Japan, there's a lot of work that's being done to facilitate the use of digital assets and bringing it into and trying to address some of the questions that arise from a legal and regulatory perspective when you're trying to incorporate digital assets into the financial marketplace. For example, Germany is just talking about this Financing for the Future Act, I believe, which is, I think it's due to be published any day now. And that is going to try to help investment in startup companies, new technologies, and facilitating transfers of digital assets. And so, the details still to come, but that's an example of a jurisdiction taking a very active role in developing this regime. Then you have countries where, in the US, where we're talking a lot about doing a number of things, but we don't have really any significant regulatory proposals made, other than there's become an increasing amount of enforcement actions, but there's not as clear a path as to how are we going to get the assets into the marketplace. So you have various jurisdictions, and then other jurisdictions, for example, like China, who are saying none of it is possible. They're not favorable to any crypto assets. So it is, again, varies by jurisdiction, but we are starting to see in many cases that there are more steps being taken now in the wake of FTX to bring regulation over the assets, to bring clarity, to help investor protection. And then a number of jurisdictions, although not all, are taking steps to actually bring the assets within and support the assets within the regulatory framework.
Absolutely. And this is, for me, actually, if you wanted the practical implementation of all of this, really being a challenge. Now, we all recognize that digital assets, blockchain technology changes a lot in terms of the actual processing, whilst the overarching objectives we are talking about that aim at the safety of assets in a way are timeless and independent of the actual technology. But we can't ignore, therefore, the fact that in the detail, some of the control processes do have to change, and sometimes change quite a lot, and we may initially not even recognize them for what they are. Because if you take, for instance, the settlement finality or confirmations of blockchain networks, what typically happens for crypto assets is that everyone waits for a number of confirmations before a transaction is considered settled. For instance, for Bitcoin network, you may wait 2 blocks, 3 blocks, what have you. But this is decided independently by every custodian who's out there. So even a simple question, when does the custody obligation actually start? Does it start at the first block, second block, third block? Really new types of questions we don't have to deal with in the traditional securities market. And this is where the challenge really comes from in terms of what is best practice to ensure a certain outcome. And that is at the different stages of advancement in terms of the implementation and across jurisdictions.
Many thanks to you both. Open up now for any sort of final thoughts you want to bring up before we close.
From my side, I would probably say the topics here are not theoretical. They are practical. This is almost the essence why the custody industry exists, and it requires dialogue and also, if you want, engagement in some cases. even enhancements to the due diligence process that investors apply. So I think it's effort all across the board, regulators, custodians, but also investors all have their part to play, bring the industry forward here.
Yeah, I agree with that. And I also concur with Sven's point about there are practical issues that need to get solved. It's not just theoretical. And I think regulators and the industry is working to try to address those. There are some real challenges, but I think the financial industry has proved that it is innovative, and we will be able to come up with solutions. For example, I know we talk about exchanges, and the concept of an exchange and the way crypto assets trade, there's a lot of similarities to securities, although there are some key differences. And that's, for example, today, most crypto assets and digital assets are traded on a pre-funded basis. There's a rule proposal out in the US from the SEC for investment advisor custody, which would call into question the ability to have such a pre-funded model because the assets would always have to be held with a qualified custodian. So what do we take from that? Do we take that we just can't deal in crypto assets, or do we take from that we need to come up with a way, if that rule goes through, that we need to modify the trading process for digital assets? And I think there are some examples in the U.S., for example, where there are ATSs that are trading crypto assets or digital asset securities, and they're doing it in a way that doesn't require pre-funding. Now, there's some drawbacks to that, but there's the ability to modify our approaches to things based on just being forced to innovate, and we come up with ways of doing that. We'll see that in a number of places, but there are these unique aspects of the way digital assets work that we'll need to make sure we're addressing. They fit within much of the existing framework, but there are these edge cases and these use cases that need to be addressed. And I think that's something where we are seeing developments there. It's just taking a little bit longer than it takes to the technology to evolve.
Justin, Sven, thanks again for joining me.
Awesome, thank you.
Great, thanks very much.
And of course, thanks to everyone listening. I hope you've enjoyed this and found it a valuable discussion. To read the latest State Street Digital Digest, visit statestreet.com, and I hope you can join me again for future podcasts. Thanks very much. Bye.